Coming up on the show, we look at the listed property sector with Evan Robbins, who's head of listed property at OMIGSA. Evan, hi to you. Let's start with this new listing, Hermans and Romans, a name that South African investors are not familiar with. Is Evan not with us? Well, let's say what else is
Hello,
coming
sorry,
up.
I didn't hear the question. I lost sound.
Sorry, Evan. The Hermans and Romans, the new listing, the new property listing that's coming up. Not a name that's well known in South African investment circles. So just your broad picture of what this means and where that's going to go.
We've seen a mini listing boom in the property index in South Africa as property grows in asset class. This is going to be one of the larger potential listings, mainly retail focused. I think it's exciting for the sector that there are so many listings that want to happen. It's not surprising because the sector trades at a premium to NAV. So if you're a vendor, you can actually sell your properties by listing it, and you will get more than you actually get on the direct property market.
Okay. I guess that maybe suggests that the market thinks that cap rates are going to keep growing. Evan, your views on that?
I think the listed market tends to look at bond yields maybe more than the direct property market does, and bond yields are low. So when listed investors compare what they're getting from listed property compared to what they can get for bonds, for example, it looks more attractive. The direct property market will be less influenced by that in the short term, and possibly more influenced by some funding constraints that the smaller players would have in that market.
Shall we go now to that property group, Hermans and Romans? They're expecting to raise 2.04 billion rand from their listing on May the 11th. That'll make it the largest ever real estate IPO on the JSE. Now, in a pre-listing statement released on SENS this morning, the company said it will offer 203.9 million linked units at an issue price of 10 rand per linked unit. Eleni Jokos caught up with their chief executive, Leslie Hermans, on the listing.
Hermans and Romans properties will be an offering which is unique to South Africa. It will be the first of its kind, given that this portfolio is the first portfolio to be listed, which includes a substantial asset outside the borders of South Africa. And as you indicated, it's located in Lusaka in Zambia. We're very excited about this opportunity, and we believe it's this that's really going to set us apart and distinguish ourselves from the other listed companies on the real estate sector of the JSE.
Well, let's go back to Evan in Cape Town. We've dealt with Hermans and Romans. I'm battling to get where the S is in that title. It's a new name to get our head round. How important is a new listing in the property sector? We've got some big beasts in that sector.
Well, yeah, and this is certainly not a small listing either. I mean, to me, this suggests that there's still plenty of appetite for property out there, and it goes and begs the question: well, if there's a premium to NAV in the sector, I mean, is that going to encourage one, more listing, and two, more building?
Evan, your assessment of the sector generally, is there space for this new listing, and is there really an appetite for it?
There's certainly space for new listings. I mean, the sector is many times bigger. I mean, 150 billion, so it's not huge in the context of the sector. There is a lot of cash flow in the sector. Remember, property companies pay out all the distributions to unit holders. A lot of that is reinvested back into the sector. So in addition to natural flows or buyers who go into the sector itself has quite a lot of cash to recycle. Other companies can retain income and grow through retaining income. Property companies can't. So when they pay out the cash, there always is natural growth in investors who can actually put their cash to use through new listings or through capital raisings or back into the sector. It will, on the margins, reduce pricing pressure into the sector, of course, because those funds that might have gone into other currently listed companies could go into a new listing, which will keep prices slightly lower, but it's not huge in the context of the sector.
Evan, in investing in property, we've got a choice between, say, retail property, office properties, commercial, industrial properties. Where's your preference going to lie?
I think at the moment retail And the good retail, the big strong centres are the investment place to be because of the stability they're providing. They don't have the vacancy issues and the rental issues that offices have, but they are expensive. So they're held up very well historically. They are expensive, but certainly they provide the most stable and secure rental stream. The fundamentals look the best at the moment. But over time, when conditions recover in other sectors, we might very well see that those sectors actually offer better value.